Thank you. So thanks for welcoming me here this morning. It's always a pleasure to present at Sydney. We were here last year, of course, and we've got a pretty different company this year than last year. Last year, we were not producing, we were gearing up. We said we were going to start in July, and we actually did, which, it's great to produce things on time. So what is Matsa? What's our investment proposition? We are an undervalued gold producer, have been for some time, but we're creeping up, obviously. We've got an existing resource at Lake Kerry, 949,000 ounces of gold at an average of 2.5 grams per tonne. Really good grade, don't quite often see that grade. We've commenced a 10,000 metre exploration program at Fortitude North. This is our flagship exploration project. Obviously, it's not connected to our Devon Gold project, which is separate, but only some 12 kilometres away as the crow flies. We're currently mining at Devon, and we'll expand on all of this. We've got a very interesting tenement option agreement with AngloGold Ashanti. We have got no certainty that this transaction will occur, but if it does, it's worth about $116 million in cash to us. I'll expand on that. And of course, our real story, becoming a long-term, significant producer in the goldfields, and we are working quite diligently on producing feasibility studies. Hopefully we'll deliver that towards the end of this year. So our share price, we were 12 cents some 3-4 weeks ago before the melee of the Hormuz Strait occurred. We've been knocked down, just under 7 cents at the moment. Excellent buying opportunity in our opinion. Our market cap today, $65.1 million. Importantly, our cash and cash equivalents, and what we mean by cash equivalents is gold bullion and ore stocks sitting on our ROM, currently just under $23 million. So our true enterprise value is in the vicinity of $40-odd million. Here's the slide. Here's the slide that's very important. Our EV, $51 per ounce. That does not include any ounces that we have already seen at Fortitude North. So if we were to release a significant maiden resource sometime this year, even if we still use this $51 EV per ounce, we should have a significant impact on our share price. We are significantly lower in value, but look at our grade, 2.5 gram per tonne average, significantly higher than a lot of our peers. There is the value proposition in Matsa. It's always existed. Last year we were here, we were between 3 to 5 cents. We're recovering in share price, our values are going up. We have spent a fair bit of time and effort over the last 4 months to build our team. Yes, sure, the board of directors haven't changed, but we've employed exploration managers. We've employed new mining superintendent geologists. We've employed something like 7 geologists since the beginning of this year. And we're employing a few more, and we're getting some mining engineers. What this means is we're building our capacity to actually deliver on our story. That's the single most important thing that we're focusing on right now. So where are we? Lake Kerry Gold Project, 244 kilometres northeast of Kalgoorlie, some 70 kilometres directly south of Laverton. We are in a prolific belt surrounded by AngloGold Ashanti to the north and to the west, Northern Star, I was going to say Saracen, Northern Star to the south of us. We've got some other operating mines in and amongst us. All of our tenements are contiguous, 450 square kilometres. It is not itsy bitsy. Our pride, our prestigious landholding is Fortitude North. We've identified an exploration target there of somewhere between 640,000 ounces of gold and 1.85 million ounces of gold. That's what we're going for this year. We are currently drilling there as we speak. So we hope to start delineating these resources. We hope to deliver a maiden resource within the next quarter or so. What do we have at Lake Kerry already? We've got a full camp, 112-person camp, fully operational. We have got full fuel storage. As Christy mentioned, there was some media about fuel supplies. That's not a problem. We have geared up our capacity. We don't think that we will have our operations interrupted by fuel shortage. We've got our own airstrip. We have everything we need to be fully self-sufficient at Lake Kerry except our mill. And that's where we're now turning our attention to. To get a mill, we need a quality resource. So we are commencing the building of those ounces. We've already got 949,000 ounces. We want to add another 1 million ounces to that 949, and we want to do it this year. The way to do it is drill. So we've started an initial 10,000 metre program. That started about 4 weeks ago, and we will continue with that for the rest of the year. So we've currently got a land rig. This is the actual rig that's out there, and we're blasting away at it. Fortitude North itself, it's a 1.7 kilometre long mineralised zone. We've got some massive hits, as you can see there. This has been an ongoing story. We've been having interrupted drill programs because of finances and setting up of Devon, but now that we're blasting away, we expect this to continue. So at Fortitude North, what we've got is we've got these lenses of gold that start from surface or near surface and go down at depth. It took us a while to understand the geological model, but we're getting the handle of it now. So we've identified 4 or 5 of these lenses. We think there is another 2 or 3 lenses yet to be discovered, and that will be part of our drilling later this year underneath the actual lake. But you can see some of these hits: 35 metres at 3 grams, 47 metres at 2.5 grams, 22 metres at 9.2 grams. They are phenomenal. They are fantastic hits. We are concentrating towards the north at the moment. We want to delineate the resource to the north, so we're doing JORC resource type drilling, coming down to the south where we'll start to get into more virgin, open, unexplored ground. The yellow is where we're currently drilling. This is what we think Fortitude North looks like: a 1.4 kilometre long mineralised or probably economic zone that is open at depth, and that's what we're currently testing. In the yellow is what the 2 holes that we've completed last month. I was going to say this month, but we're in May. So we expect these results to come out in the next 3 weeks, something along those lines, and these holes will continue. These holes are down to 360, 370 metres in depth. So we hope to go through several different layers to prove up these different lenses that we have at Fortitude North. The deeper we go, the richer this ore body's getting, and you can see that from some of our assays that we've got. Fortitude North is 6 kilometres directly north of Fortitude. I apologise about the names, but our geologists aren't that inventive. So at Fortitude, we've got 489,000 ounces of gold. We have got an approved mining lease, and we've got approved mining plans at Fortitude. So what does that mean? We can start mining there tomorrow. We've done a historical 10,000 ounce trial mine out of those 3 pits that you can see. Yes, that's our work that we did in 2019. That was all processed at Sunrise Dam. We achieved recoveries in the 90%. So that was very successful. This is what we think the Fortitude mine will look like. About 1.6 kilometres long. It's not as deep as Fortitude North. It's not as rich as Fortitude North. But we've got considerable untested areas at Fortitude, so we will probably start doing some drilling there in July, all part of a greater feasibility study for Lake Kerry, where we aim, we expect, we hope to be able to produce a 10-year mine life of some significant scale. We've got other areas that yet to be discovered. FF1, again, blame the geos. Far Fortitude North 1. We've got a bullseye magnetic anomaly to the north of that we have not yet put a hole in. So we will do systematic exploration of our tenement package, 450 square kilometres, predominantly poorly explored historically. Some of it is on the lake that's never been tested, but with new lake rigs, you can test them quite economically. So we think the exploration profile for Matsa over the next 12 to 18 months will be quite significant. So Devon, we are currently mining at Devon. We started mining Devon in July. We've completed campaign 1, we've completed campaign 2. Notably, campaign 2, our second campaign, we are toll milling at FMR, 288 kilometres away. Notably, campaign 2 gave us an EBITDA of $5.5 million profit. Now, you don't see that normally in open pits. This is a very high strip ratio. We managed the costs and we're quite proud of that achievement. So what we want to do is do campaigns 3 and 4. We will start campaign 3 on the 28th of May. It'll be slightly interrupted because of FMR operational requirements, and it'll then resume in July. So we expect to do 80 to 90,000 tonnes over the 2 campaigns. But importantly, have a look at the green. That is the story. Between campaign 1 and campaign 2, we had significant step changes in the quality of the production. Our ounces sold, or ounces produced, increased by 114%. Gold sales increased by 145%. So what we're saying is we earned $28 million in 4 months in campaign 2. So campaign 3 and 4, we're seeing more growth. We're seeing another 15% in production anticipation. We are seeing further 6% growth in gold sales. So between now and early August, end of July, we hope to bank somewhere in the vicinity of $45.5 million. Now, most of that's already been paid for. So a lot of that is free cash to our company. Not bad for a company with a 62 million market cap. Our recoveries, mid-80s, not brilliant, not shocking, but we hope to improve that. So we think Devon Pit Gold Mine is a sensational stepping stone to our bigger picture. Devon is providing the cash for us to put together what we want to put together for our 10-year plan that we hope to deliver towards the end of this year, mid to end of this year. We've already started on that and it's looking quite good. Now, here's the kicker, the Anglo Gold deal. They've already paid us $7.2 million in option fees. They need to pay us another $1.5 million on the 20th of June to keep this option alive. It's worth $136,850 at $7,000 an ounce. So I did this calculation a few weeks ago. My apologies for not updating it. They are acquiring an option over the areas in black. It is 5 tenements to the southwest of our tenement project area. It does not interfere with Fortitude North. It doesn't interfere with Fortitude. Doesn't interfere with Devon. Doesn't interfere with the majority of our exploration program. Importantly, they have been drilling on our boundary now for 6 months with diamond drill rigs, lake diamond drill rigs. You do not drill there for 6 months if you're not onto something sizable. So, are they going to exercise this option on the 20th of December? Somewhat 8 months away for $136 million? I don't know. But we'll find out. We'll find out. So, we wait for them to finish their exploration. The white line is our boundary. On the left-hand side, looking that way, is where they have been drilling. On the right-hand side, they are drilling. What they have informed us that they've already completed some 12 holes. I can't really remember the number, my apologies. But they've now commenced IP surveys. They're doing geophysical surveys in the area, and they're already telling us that they tend to resume drilling in July. So if they drill in July, that means they've got to pay us our option agreement. If they're going to pay our option agreement, that means they're up to $9-point-something million. You don't blow $9-odd million if you're not serious. We're fully funded. We've got spare capacity. Our friends Deutsche Balaton have given us a $17.5 million facility that is there available for our use if we need it. We're an undervalued gold producer with a strong development plan. I've got 1 second left. How's that? Thanks very much. Enjoy talking to you.